Hello everyone, and a very warm welcome to today's webinar, which is all about pension re-enrolment in Sage 50 Payroll. My name is Sarah and I'll be hosting and presenting the webinar for the next 45 minutes, and I am joined today by my colleague Duncan, who is standing by ready and waiting to answer your questions in the background. Now, re-enrolment is one of those tasks that only comes around every 3 years, so it is very easy to forget exactly what's involved. But that is what we're here to fix today. So by the end of today's session, you'll know what re-enrolment is, when you need to do it, how to run it manually and through the pensions module, and how to complete your redeclaration. And do remember, this session does count towards your Pensions Discovery Digital Badge, but we will talk a little bit more about that at the end of today's session. So we'll start off with what re-enrolment actually is, what it means, when you need to do it, and the steps involved. We'll then move into the practical part. So re-enrolment using the pensions module, where we'll look at a practical demo on how to complete that. After that, we'll take a quick look at redeclaration, so how you declare your compliance with the pension regulator and the timescales around that as well. And we will finish off with further support and questions as always. So let's start at the beginning. What exactly is re-enrolment? So in simple terms, every 3 years, you must assess whether employees who previously opted out of or left your pension scheme need to be put back into it. Now, this is a legal duty that sits alongside your ongoing auto-enrolment responsibilities as an employer. And the key thing to remember is that opting out isn't permanent. Now, the regulations assume people's circumstances change. So we do recheck that every 3 years. Now, your exact duties will vary depending on whether you actually have any employees who fall into a category that you might need to enrol. So some employers will have several, others might have no one at all that this applies to, but either way, you still have an obligation. We'll see why shortly. Now, I have linked at the bottom of the slide to some pensions regulator guidance for employers if you do want to read a little bit more about that in more detail. Now, timing is really important with re-enrolment. So I do want to walk through this together. Now, your re-enrolment date is based on the 3rd anniversary of your staging or duty start date, or your previous re-enrolment date if you have went through a re-enrolment before. Now, you don't have to pick that exact anniversary. You do get a 6-month window either side of that. So the earliest possible date is 3 months before, and the latest is 3 months after. And then crucially, you have up to 5 months after your re-enrolment date to complete your redeclaration of compliance. Now, you do want to keep that 5-month deadline in mind. We will come back to that in the last section where we talk about that redeclaration. So that's a bit of a timeline of re-enrolment and a couple of important dates there to remember. But at a high level, there are 4 steps to re-enrolment. So 4 key steps here. So first step is choosing your re-enrolment date. And that's actually going to be from within that 6-month window that we've just taken a look at there. So you might choose to stick with your 3-year anniversary date, or you might choose a date that's more suitable for what's going on in your business at that time. So remember, that can either be 3 months before or 3 months after. So you do have a lot of wiggle room when it comes to exactly when you're going to carry out that re-enrolment. Secondly is, of course, assessing and re-enrolling any eligible employees. Third is writing to your employees that you are re-enrolling So letting them know what's happened and that they can, of course, opt out again if they wish. And 4 is completing your redeclaration of compliance with the pension regulator. Now, that step is mandatory. Even if you do assess your employees and it actually turns out there's no one to re-enroll, you still have to complete that 4th step. So it doesn't matter your circumstance, step number 4 is mandatory regardless of the circumstances. Now you can do all of this manually, and it is definitely worth understanding what that looks like if you don't happen to use the pensions module. Now, manually, you would assess each of your employees yourself against the eligibility criteria. Then you would go ahead and assign a pension scheme to any eligible employee who isn't currently in one. You would also need to download your own letter template from the Pensions Regulator website to then send on to those employees who are affected by it. Now, before we go ahead and jump into the demo around the pensions module, I do want to quickly show you how this would work manually, just so you can see what's happening a little bit behind the scenes. So let's lose the slides for a second and get jumped into payroll. So the first thing that you want to do is check eligibility. Good part about this is 50 Payroll has all of this at your fingertips, so you can go to company and then you can go into legislation just within your company tasks there. From here, we have an automatic enrolment tab. And here we can see all the different criteria. So we can see we have eligibility age, we can see that's 22, up to state pension age. We can also see the earnings as well. So we can see the earnings trigger, annual, monthly, 4-weekly, fortnightly, and weekly. So you would essentially just check the age, check their earnings, and of course, the next part of that puzzle is identifying who actually might need to be re-enrolled. Now, there is a handy report that can help you do that. So you have your legislation information in here. But in terms of actually figuring out who might need to be re-enrolled, you can go to your reports. Now, I do have mine in my favorites, but you can find this report in your company folder. Down, we have the pensions automatic enrolment report. Now, if we preview that, you can see a list of employees who are identified as eligible, but not currently in a scheme. So we can see, for example, employee 1 is opted out. From there, once we've identified those employees, we would then go into the employee record. To the pensions tab. We can see the correct information in there, so they have indeed opted out. That was back in 2023. They are definitely earning enough and are old enough to go into the scheme. From there, we would go into manage schemes, see our previous scheme in there, but as they've opted out, I could simply go and add that again. Amend my join scheme dates and active membership achieved dates, and then press OK and save within the record. Now, I'm not going to do that as I do actually use the pensions module in my company. So I am just going to cancel out of that for now. So that is the manual process. You just want to identify, reassign, and then of course download the letter templates to then communicate that to whoever has been re-enrolled in the scheme. But as you can see there, especially if you do have a larger payroll, there are quite a few steps to that. Now, it is perfectly doable, but as you can see, it is time consuming. And of course, it is a lot easier to make a mistake. Now, the good news is that the pensions module actually automates most of this process for you. And that is what we're going to look at next. So let's get hands-on and see how the pensions module will handle that for us. Now, this is where it all starts, in the pension module settings. Within that, you find your re-enrolment settings. So first up, you would want to check and amend your cyclical re-enrolment date. Remember, you have that 6-month window either side. So the software will just suggest a date based on your records, so your previous re-enrolment date or your company's staging date. But you do always want to confirm that's the date you want to proceed with it. Secondly, another option that you can choose is whether to re-enroll employees who have opted out or left within the 12 months leading up to your re-enrolment date. Now, this one is totally up to your discretion. You are allowed to leave those very recent opt-outs out of the process if you prefer. So that's within a year window. If they've opted out within a year of your re-enrolment date, they wouldn't have to go back in until the next cyclical re-enrolment, of course, if they wanted to join. So really, that just is down to you as an employer and your preferences. We then have some exclusion reasons at the bottom there. So if, for example, someone was working a notice period, things like that, then we can also set up those there. So with that said, I do just want to jump back into Payroll for another demo, just to check my settings for my company. I'm going to stay in my company tasks. And I'm going to go to my pension module settings. This will open my pension module settings. In here, I can see my duty start date, see my default auto enrolment schemes, and of course, I can manage my cyclical re-enrolment settings. So that's the option I want to go into. Now we can see here, payroll has just defaulted to 3 years from my duty start date. So that's the 1st of July, 2026. But we can see at the bottom here, we have our 6-month window. So you can choose a date, any date between the 1st of April to the 30th of September. So any date that works for you. Now I am just going to keep it as my 3rd anniversary, so I'm going to leave that as the 1st of July. But of course, you can feel free to move that anywhere within your window. It really is just down to whatever your preference is. One thing to bear in mind though, is you can't pick a date in a period that has already been processed. So if I go back to, say, May, you can see here, it will come up with a warning. The date we have entered is a historical date. So just a word of warning there. Can't be historical as long as you haven't processed. So I haven't processed for June or July, then that is absolutely fine. Next up, we have our exclusion settings. So remember, employees who opted out or ceased membership of the scheme within the last 12 months of this date. So it will be the 1st of July is the date it will be using for that. Now, I am actually going to exclude those from assessment. just to avoid really re-enrolling someone who has very recently opted out, so they don't have to go ahead and opt out again. Now, again, this is totally optional. It is just down to you as an employer whether you want to do that or not. So either way is absolutely fine. Next up, we have individual exclusions. So we did touch on this earlier, but I will show you the entire list. Now, see here, work and notice period is probably quite a common one. We have director without employment contract as well. So might be if you've got a couple of directors on the payroll, if someone's moved from an employee to a director and they're now excluded, then this is where you can set up those different exclusion reasons. And what that'll mean is when you do come to do your cyclical re-enrolment and you run that assessment, the system will ignore those employees who have that exclusion set up. So that is it for my settings. I've confirmed my date, which is going to stay as the 1st of July. I'm going to exclude my employees who opted out or ceased membership within the last year. And I have no exclusion reasons, so I can just leave those alone for now. So I'm going to save and lock those settings in and save my pension module settings as well. So once that's set, really you're ready to run your assessment and complete your cyclical re-enrolment. But don't worry, you will get another final check before you go into that, and I will show you that shortly. So now we have our settings in place. Now the timing of the assessment and the re-enrolment really matters. Now I did touch on this before, but I do want to work through a bit of an example to bring that to life a little bit. Now, the golden rule with re-enrolment is employees must be assessed in the same tax period as your re-enrolment date. Now, if your re-enrolment date falls after the assessment date, contributions are taken from the next pay period. And that first contribution will actually include a pro rata amount to cover that gap. Now, this is really important to know as it can throw a lot of people off. You look at the amount on first glance, it looks too high. So it can really throw a lot of people off when it does come to processing that first contribution. So in this example, employees are paid monthly on the last day of the month, and the re-enrolment date is the 1st of July. Now, naturally, if you are processing a monthly payroll, they get paid at the end of the month. You would run your pension assessment on the 30th of June. And that would re-enroll any eligible job holders who have previously opted out or left the pension scheme. Contributions, however, will start from the 1st of July. And that first contribution includes a pro rata amount for the 1st to the 5th of July. So let's go ahead and jump back into the demo for this one. Take a look at that in action. So I'm in my June pay period, last updated 31st of May. I'm going to just double check my processing date. Yeah, I'm ready for the 30th of June. Now, just for the essence of time, I have already entered my payments. Just want to check on an employee that has opted out. See there, if we look at pensions, employee 1, for example, yeah, they have opted out 31st of July 23. See the old pension scheme in there, and there's no pension scheme currently set. So with that said, the next step in my process is to run the pension assessment. So I'm just going to highlight all of my employees. Remember, I've already entered my payments, so I'm just going to skip ahead and go straight to my pension assessment. Now you can see straight away, because we've hit our enrolment date, remember my cyclical re-enrolment date was set to the 1st of July. And as that's in the same tax period as I am currently processing, our cyclical re-enrolment will happen now. However, our contributions won't start until next pay period. So I'm just going to do one last chance to review our settings. Again, if anything is incorrect at this point, now is a really good time to go and change it before you proceed. So always good to triple check and review this page before you crack on with the exclusion. So I'm happy that the settings are correct and I'm ready to proceed. I'm excluding my opt-outs within the last 12 months and my date is going to remain as the 1st of July. So I'm going to confirm that and just proceed with my re-enrolment. Now I'm just going to take a quick backup here. As we always say, you can never have too many backups. If anything goes wrong, or if I realise maybe the date is wrong, I was meant to amend it. If I've got a backup, it's a really good safety net. So I'm just going to call this cyclical enrolment. And if I do need to change anything, I've got that bit of a safety net there. Now that's done, it's loaded my pension assessment page. Now in the assessment, I'm looking for any changes. So we can see employee 1, we'll hover over the flag. If you came to our pension assessment webinar, you'll note the flag just means anything that has changed this time round. So we can see employee 1 is being assessed as eligible and they've been cyclically re-enrolled this pay period. And employee 3 is the same kettle of fish. So they again have been reassessed down with the re-enrollment and they have been re-enrolled this period as they have been identified as eligible. Now, something you will notice is that for employee 1 and 3, there are no contributions yet. So they are being auto-enrolled into the scheme, but because my re-enrollment date was set to the 1st, contributions won't start until next time round. But in the background, what the system will be doing is working out that pro rata amount between the 1st and the 5th, and it'll then add it onto that first contribution. Now, I do just want to look at another example. So if we look at employee 10, obviously no changes there, but they are actually an opt-out. But you can see they actually opted out in May this year, so only a couple of months ago. So because I set up that exclusion reason, so they don't have to go back in if they've opted out within a year. So you can see that applies to this employee 10. They're not going back into the scheme as they've opted out within the last 12 months. So we chose to exclude them there. So I'm happy with that. Employee 1 and employee 3 are being re-enrolled into the scheme. Now I'm just going to close out of my assessment. Now, as I close out, again, something different to a normal assessment is because we've now completed our cyclical re-enrolment, Payroll will now give us a little reminder of the next step. So we can see a nudge to complete our redeclaration, send any member enrolment files to our pension provider, whether that be through Send Pension Data or by exporting, and of course to write to any employees as well. Now, I'm happy with that. I'm just going to close out of there. Now, I am just going to skip ahead. Of course, you would do your pre-update reports, your online pay slips, and so on. But I'm just going to skip ahead to update records, just so we can take a quick look at sending pension correspondence as well. So now that I've updated my records, I can go ahead and submit my full payment submission. Now, I'm just going to skip ahead. And of course, I do have 2 employees that are getting re-enrolled. And with that, I am going to need to write to them to let them know. So we can see here, I've got 2 letters to be sent. And of course, there were 2 employees getting re-enrolled. I can click on a preview of the letter. And I need to make sure they are sent out to the employees just to make sure they are informed of their situation. Now I'm going to send those a day after the re-enrollment date. And these will actually get sent out by our provider as well. I can see now they are now within the historical. So I've got a paper trail of that. Now, just to complete the picture, I do want to look at July as well, but remember it was employees 1 and 3 that were re-enrolled. And I just wanted to show you what that re-enrollment has done in terms of the employee record. So if I go into this employee's record, we can see we have their re-enrollment notice in here. So because we've sent pension correspondence, we have our re-enrollment notice in our documents of our employee. And of course, the pension assessment has now changed them to auto-enrolled as of the 1st of July. We look in managed schemes. Our pension assessment has put that in to the record automatically for us. So you can see how much the pensions module has automated that process for us. So it's done our status changes, it's put the scheme in there automatically for us, and it is give us our correspondence document within our record as well. So that's all looking good for June. Now, although they've been re-enrolled in June, of course, there was no contributions being deducted on that first pay period. So to complete the picture, let's just move forward to our next pay period for July. There's no changes to my payments, so enter payments, and I'm just going to skip ahead to our pension assessment. So let's jump into that again. And what we can see now is we can see employee 1 and employee 3 have now got deductions on there. So no, although they were enrolled last month, no contributions calculated, because remember their enrolment date was from the 1st of July. Now, if we just look at a comparison, so we can see employee 1, their qualifying earnings is £5,000, their enrolment date is set as 1st. Now, what will happen is this employee will be a little bit higher. So, as I explained earlier, their contribution won't just be the bog standard 5 and 3%. So if you are trying to reconcile it and you have a pro rata amount, it is going to be slightly higher. And the reason for that being is the 1st of July to the 5th of July, that should have been included in the last period, will be added on to this period. So it is something that can throw a lot of people off. It is absolutely nothing to worry about. For example, if we look at employee 2, so they're an employee that has been in the scheme for a while, they never opted out. You can see they've been in there from 2023. Their qualifying earnings are £2,500. And you can see their contributions are £79.20 and £59.40. Employee 3, they're the employee that has been re-enrolled. Their qualifying earnings are exactly the same as employee 2. However, their amount is slightly higher. Reason for that is the pro rata amount for the 1st to the 5th of July is added onto this first contribution. Totally normal for this to happen, but after this first month of contributions, they will settle back down to the usual amount. So when it comes to August, employee 3, providing that it's still earning the £2,500, will drop back down to £79.20 and £59.40. So don't let that pro rata calculation throw you off. Finally, if any employees do choose to opt out again, you can always opt them out in the usual way. So if they've sent that request in, you can always opt out by using these options at the top. So if employee 1 had written into the pension provider, they've actually opted out, decided to leave the scheme again, you can process that request in here. Of course, there isn't any refund due, as the refund didn't start to this pay period anyways. So you can see that amount is as 0. I'm just going to go ahead and process that. Of course, if anything had been deducted, then it would be refunded back. But because in this situation, the contribution started a little bit later, no refund to process. And you would just manage opt-outs in exactly the same way after re-enrolment. So that is all sorted and my opt-out processed. Employee 3 is going to stay in the scheme, and we've looked at that pro rata amount as well. Now, I do just want to go through a little bit of a recap. So just to recap the steps that we've just seen there. First screen we saw was a confirmation of our cyclical re-enrolment settings. So remember, this is your last chance to make any changes before you proceed. We've then seen the assessment running within the pensions module. Remember, the assessment will look at each employee. It'll apply the rules that we've just looked at and then flag who needs to be re-enrolled. So as we've seen, no manual check-in required. Once it's run, you'll get a clear view of exactly who has been re-enrolled, ready for that next step. This is the second part of the process. So once that cyclical re-enrolment is done, you'll close out of the screen and you'll see confirmation of those next steps that you need to take. So completing your redeclaration, sending member enrolment files to your pension provider using maybe send pension data or an export report. Remember, we do have a webinar coming up on send pension data as well. So if you are wanting to know more about how that works, definitely get signed up for that if you haven't already. From there, we've seen how the module also produces the letters that you need to send to the employees that you've re-enrolled. So no, I didn't need to download any templates separately, all handled all in one place. So you can preview the letter by clicking on the link. You can mark them as sent, maybe if your provider deals with the correspondence, or you can send them out using print or email. But just a heads up, if you do want to email them, just make sure you have the email settings for your employees set up within your analysis tab of the employee record. Really important that that's in place before you do it, just so it works nice and smoothly for you. But once you've completed these steps, your employees are all re-enrolled and notified as well. And at that point, really, you're ready to move on to your redeclaration. And this is the one final, again, essential step that everyone has to complete, and that is the redeclaration. So you'll recognise this timeline from earlier on, and I did want to bring it back just because it's where that 5-month deadline becomes really important. So your redeclaration of compliance is due within 5 months of the 3rd anniversary of your duty start date or your previous re-enrolment date. Now, again, I know I do keep on drilling this in, but it is very important. You must complete the redeclaration even if you don't have a single employee to re-enroll. So it might be that you have on your payroll, everyone is in the pension scheme, no one has opted out, therefore there is no one to re-enroll. However, you do still need to complete this redeclaration. But missing this deadline is one of the most common reasons that employers can hear from the pension regulator. So it is very important. So do you want to be clear on what is required? So you want to complete and submit that redeclaration within 5 months of that anniversary. Now, of course, I can't demo this part, unfortunately, as it isn't done within the software. This is actually completed directly via the pensions regulator website. So once you've run your assessment in the pensions module or done it manually, like we've seen in the demos today, then you want to head over to the pension regulator website to then make your declaration. Now, there is a link here on the guide on how to complete that redeclaration of compliance. So definitely get the handout downloaded if you haven't already. Now, we do have quite a handy example of their checklist as well. I'll just drag over on the screen so you can see they do have a lot of really handy resources to help you out with completing that redeclaration of compliance. So definitely recommend visiting their website and getting these downloaded if you don't have a copy handy. So this is just a bit of a checklist here, and you can go through and check these off as you gather all of the information necessary. So really, really good in keeping organized, and just means that you have everything at your fingertips before you go ahead and complete that redeclaration, as you will need all of the information on the checklist. So definitely a lot of handy resources to give you a hand and a bit of a help with completing that there. So that does bring us to the end of the content of today's webinar. Hopefully by now you are all feeling a bit more confident about re-enrolment. Again, it only comes around every 3 years, so it is so easy to forget how that looks like. But as you've seen, how to do it manually or using the pensions module will automate all of that process for you. But before we go ahead and wrap up, I do want to finish off with some further support. Now, as you know, this session is part of our Pension Discovery 2026 series. And here is how you earn your very own digital badge. So you want to attend at least 5 different webinars, plus the pensions quiz, and you'll earn your digital badge. Now, today's session counts as one of those 5, so well done. You've got at least one checked off the list. But one important tip I do want to touch upon is you do want to make sure to register for every session using the same email address. Otherwise, your attendance won't link together. It is how we track the attendance for the badge. So make sure to use the same email. But if you haven't registered for your 5 sessions yet, then you can register now using the link in the handout. And of course, we have our help centre as well. So if you take one website away today, make it sage.co.uk/help. That is home to our searchable knowledge base. We've got our step-by-step support guides, recording of our on-demand webinars, and a lot of how-to videos as well. So pretty much every question that comes up will have a guide that you can refer back to on here. And you can also get in touch with our Fab Tech support team from the same place as well. So really great, this one. Definitely get it bookmarked if you haven't already. And last but not least, just to let you know, we do now offer personalised one-to-one training. So if a dedicated one-to-one remote session with an expert, they can tailor the call to you, your needs. If that sounds good to you, then scan the QR code and complete the form. Really quick to complete, and someone gives you a call within 48 hours to chat to you and just make some recommendations on what we think would suit you and your needs. Now, even if you just want to gain a bit of confidence or automate some processes, see if we can make your day-to-day a bit easier, then please do let us know. We have had some great feedback on these sessions, so these will be available on the handout as well. Scan the QR code now or scan it a bit later and someone will be in touch. Hello again, everyone. That does bring us to the end of today's webinar. Can't see any more outstanding questions there. Thank you so much for joining us today. Before you go, if you please take a minute to complete the short exit survey as you leave. Your feedback does genuinely help shape these sessions going forward as well. You'll also receive a follow-up email later today. It'll have a link to today's webinar recording on there and info on how to register for any future webinars. So take care. Hopefully we will see you again soon. From me and Duncan, a big thank you for coming today, but it is goodbye for now.